I think it is wonderful to have you for this chat. And to begin with, we can very quickly kind of jump in. But if you want to very quickly kind of introduce yourself or what you identify yourself most with, operator, VC, more of a Bangalore guy now, or more of a Silicon Valley guy, if you want to take a quick jab at that.
Yeah, and thank you so much for having me. I really appreciate it. I would consider myself more on the investing side now, but I started as a founder in 2011. I moved to the Bay Area to start my first company, which was a lot of learnings and a lot of ups and downs. It was in the online dating space, so it was something where I learned a lot about kind of the consumer side and people's social behaviors, etc. Um, and then I started my second company, which was in the pet space, which became like the largest pet platform in the United States. So really having people take care of your pets when you're not home, whether if it's from dog walking or sitting and boarding, etc. Um, and then in late 2019, I met a guy named Herschel Mehta, which was investing in U.S. and Indian startups, and went to his cousin's accelerator 100x.vc, which I'm sure you guys are all aware of. And that's where I really kind of got the investing bug because I saw a lot of opportunity within the Indian founder, and just when I was in India, just the amount of just opportunity with how India was pushing forward, whether if it's from a digital stack perspective or consumption perspective, and really this large Gen Z population just becoming more digitized and just spending more. So, and since then, I've been investing in Indian founders, primarily investing for the Indian markets, but also investing more now in Indian founders building in India for the world, or actually coming to the United States and building for the US markets using AI now. So expanded the thesis. So I consider myself an investor first now, but given my operating experience has allowed me to really help founders at the earliest stages with navigating like operational pieces of their business, not just investing.
Awesome, awesome. Thanks for that quick intro, Brendan. And I wouldn't have known that. I remember meeting you at the first demo day of 100x, and I wouldn't have known unless you mentioned it now that that was kind of a turning point for you in terms of investing or starting to invest in entrepreneurs building in India. And what was it that drove your conviction? I mean, as someone who was building companies in the US, had raised money as a founder yourself, and then starting to invest, what was it that kind of really convinced you to take a very thematic or thesis oriented look at Indian entrepreneurs at that point in time?
Well, I think with when I was in India, I saw a lot of these founders be able to launch businesses with not that much capital and be able to gain some traction and hire and just move really fast with not as much. And that really excited me with given the sheer amount of just grit and hunger that these founders have. And most of the founders that I meet in India are actually technical as well too, and I think that's an advantage. Um, so I was just really obsessed with how the founder makeup is very lean and just able to think of an idea, build an MVP, launch, iterate, and move super fast. And then also just the sheer like market. You have a rising GDP, you have a very young class of individuals. You see a country that is rapidly changing from a digital front. The pace is just fast. Consumption is growing. I think like tier two and tier three India is growing very fast. So all of these signs just point to growth. And then I think there was just a lot of overlap from Silicon Valley and India. I mean, I'm in the Bay Area, and a lot of people in the Bay Area are actually like from India or they're of India descent. So there's like a lot of similarities and stuff. Um, and that's what really kind of sparked my interest. And I also think that um, kind of going one layer deeper is when I started meeting Indian founders, I realized that a lot of Indian founders wanted access to kind of global networks and global capital from day one. And I think being able to provide a unique set of unique network that maybe others aren't don't have as deep or focus on as much. I could, and that allowed me to really also move fast and as an investor and stuff, and have a competitive edge. Where in the US, I mean, there's thousands of funds, there's a lot of people in tech, and I feel like in India it was easier for me to kind of break through that noise a lot quicker.
Nirav has given me a free hand to take up questions from the audience, and
Yeah,
I see
please.
I see one which has kind of popped up in the chat, and I'll kind of tweak that a bit. It reflects on mind shift. Okay, now as someone who has been building companies for the better part of last decade and a half, and then over the last 6 or 7 years that you have been investing in founders in India, a couple of parts to the question: Have you what similarities do you notice when it comes to mindset today in 2026, whether it is a founder building in the United States or it's a founder building in India? Are there similarities in mindsets, because people are increasingly building for a global market rather than a very niche or a very small market? And the second thing is, over the past 7 years that you have been frequenting India and interacting more with Indian entrepreneurs, have you really seen a shift in the way founders have been fundamentally operating when it comes to building a business and scaling it?
Yeah, I think the shift in the thoughts around Indian founders and founders in the, I'll use the Bay Area moving forward as the place to be. Um, I think that there's a lot of overlap in like the shamelessness. Indian founders very shamelessness. Like they're they do not, really care. They will move really fast, and they will consistently follow up. They'll consistently reach out, and I love that. I think that at the earliest stages, if you're a founder, no matter what stage you're at actually in a business, like, you have to move super fast, and every day is like a street fight, if you will, where you have to like just keep fighting. And I think the Indian founder really represents that really, really well. And that's the mentality in the Bay Area, especially now, given this AI generation that we're in. Like, everybody is fighting for market share, everybody's fighting for capital. And I think just having that DNA inside the Indian founder allows them to have an advantage and to move fast. Um, and the second piece of your question, can you repeat the second part of your question?
Over the last 7 years, have you actually seen a shift in the way founders have been fundamentally operating in terms of building and scaling a business?
Yeah, I think like, well, specifically in like India. So I'm like really, really excited about Bangalore. And I'm sure everybody on this call is from everywhere, but Bangalore to me is somewhere where you get a lot of different people from all over India that live in Bangalore. And I think that's really special because it allows founders to be able to use that market as like a test bed for early adopters and to get feedback from folks that are from all over India. So you get really good data from that perspective. Um, and I think given how products are allowing founders to just launch and get feedback a lot quicker now, and get their product into the market, I think it's moved a lot faster since when I started investing in 2019. So I think that's primarily the differences, is that like it just allows founders just to get up and running and to move fast. I also think that um, now, like, there's a lot of India from when I first started to in 2019 to now, is like there's a lot more funds, there's a lot more capital. So um founders don't need to have like there's a lot of optionality for um for capital and just people to provide value so you can to move fast. And I find that that's been a difference from scaling and stuff like that. And I think also there's also smaller startups hubs in India that are growing, like Indore, and obviously you have legacy places that are kind of tier two, like Pune or whatever it is. But there are places that are now coming up where there's other viable markets to test and get a whole new set of users, and that, which is allowing new founders to build and stuff like that. So that's what I've seen so far.
No, absolutely. I think if you look at the past decade or so, and the way the shift has taken place within India itself in terms of where founders are building from, like you rightly pointed out, tier two and tier three India. I mean, yes, there could be gaps in terms of the infrastructure or the supporting ecosystem, but yeah, founders are building from wherever they practically can. A lot of them moving back, in fact, from bigger cities so that they can build faster and not be surrounded by too much of noise. That brings me to a statement which Ninad had put out. Bangalore is building and Silicon Valley is scaling. True or false? And how do you view that? The, the the double-barrel statement of Bangalore is building and Silicon Valley is scaling.
So I think in India or Bangalore specifically, like Bangalore is a good place to to launch and to get feedback and to get design partners and to just hire whatever the case may be. And I think those are good. Those are good. That's a really good ecosystem to be able to have the right infrastructure and playbook so you can scale. And I'm speaking more so on like the B2B SaaS side, but I think that statement is true if you're building in those spaces and then you want to come to the US or launch into the US, because that allows you to get have some sort of playbook to launch into the US and to really kind of flesh out your product first in India and then scale in the US. But I would say that statement is more so I think just India in general is also scaling. I think it's the markets you're building for. And I think if you're building in the consumer side of things in India, specifically in Bangalore, the it's Bangalore is a market right now, whereas there's people are moving at light speed and they're scaling all starting with Bangalore and then scaling into other cities and stuff like that. So I would say that yeah, there's definitely a lot of building going on in Bangalore and then scaling into the US from a AI SaaS perspective, but from a consumption side and a consumer side, I think that Bangalore is build and scale as well too. Um, yeah, and to be honest with you, Silicon Valley is a place where the markets are very, very deep, and there's a lot of access to capital, and there's a lot of really good talent here. But Bangalore is just as maybe there's less capital and stuff, but in terms of the energy and the excitement and how you have investors and events and just the whole ecosystem, in my opinion, Bangalore is like almost if not on par as the future of technology. I only in my opinion, there's only 2 places in the world. It's Bangalore and Silicon Valley when it comes to, the ecosystem of what places are really pushing tech forward.
No, absolutely, and also given the number of global capability centers that have set up shop in Bangalore in specific, if you look at it, it's no longer just kind of fulfilling kind of the IT requirements, but also there's product development happening for rest of the world, which is taking place pretty much in Bangalore, and that in one way or the other also kind of supports an overarching ecosystem of sorts, and it has its own kind of offshoots leading to more innovation, more capital kind of coming in. That brings me to my next question. If you went back a few years, maybe 4 or 5, not that long, a lot of investments, and wearing your investor's hat, if you can address this, there was a lot of investment happening, keeping in mind the motto of growth at all costs, and that was the fundamental on which a lot of companies were raising subsequent rounds or successive rounds of financing. But now there is more focus on having a deep operational efficiency and specialized deep tech integrations, specifically given how AI has kind of taken almost all industries by the storm. So, what are your views as an investor on growth at all costs, and how do you at your end while you're investing look at the operational efficiency and deep tech integration when it comes to companies raising financing?
Yeah, I mean, it's a really good question because when I was a founder, I was a founder in the environment at the grow at all cost kind of inflection where really GMV was everything. And the unit economics don't have to really back out like in real time. It's almost like how long will it take until the unit economics really makes sense? And you can get into really murky waters if eventually you're just having really high cost of acquisition of customers and stuff like that. Um, I think that so right now, like everybody back then and years ago were like rewarded around GMV and just growth. And now a lot of the shift has gone to like, well, how can I hire as least amount of people as possible and use these AI products and be able to have really good profit margins, et cetera. And I think the sentiment has obviously changed. I think that as you get into like the Series A investors and beyond, um, it's a lot more around like unit economics and being using AI tools to not have to hire as many people and just be really lean in as possible and really have crazy margins. For me specifically, I'm still a pre-seed seed investor, meaning like I need I need to see traction, I need to see growth, I need to see users, I need to see people using the product. So, yeah, I mean, I don't want our founders to just be spending all of their money on Facebook ads and stuff like that. Actually, I think that's like a really like paying like having like paid strategies at such a like early part of the early part of the startup uh, journey. You don't really understand who your customer is. So I do focus on I would say a little bit of both. Like I need to see that there is users paying, that our users are using the product, etc. But there needs to be a kind of a clearer pathway as how are you growing this product organically, and is there a willingness to use this product, and are you solving a deep enough pain point where people want to use this product? So I do look at GMV and I do look at growth, but you have to really kind of peel back the onion to see where that growth is coming from and stuff like that. And you can kind of read through the lines if their growth strategies are if they make sense or not. Um, but it's definitely a different era. I mean, like a lot of founders were rewarded around GMV and just in growing at all costs and just getting as many users on as possible, and we'll figure it out later. The unit economics, obviously, times have changed. So, um, but if a company comes to me, and this may be like very like controversial, but if a company comes to me and they're like, "Well, we're profitable, we have X amount of profitable revenue, whatever it is," and they're so early at the earliest stages and then I ask them, "Well, like, how long have you been building this business for?" And they're like, "Oh, 2+ years." And I'm like, "Well, you don't really have like that many customers in 2.5 years. Like, where's the growth at?" But we're profitable though. So um it's you have to really kind of go underneath the hood and figure out like, is there growth, and is it healthy growth, and is it organic growth?
Nice. I'm going to go to a couple of questions
Yeah.
in the chat window, and it's pretty much around some of the things that you spoke about, whether it is the financial metrics that investors would consider while writing an early check, and also how do how does AI and emerging tech actually change the way VCs are evaluating early stage startups before writing a check?
Like how does AI like help solve some of their internal issues or
Uh, Not really sure about that. I mean, or it could also be integration of AI and deep tech into
oh, I
ventures
see.
that you would consider.
Yeah, so it's a good question. I think like, AI is really solving a lot of pain points for individuals. And I think that um just AI is complementing a lot of like legacy businesses and legacy industries and just solving, yeah, just massive, massive pain points for industries. And I think investors are excited about AI. AI clearly is not going anywhere. The real question that I think a lot of investors have is who are the right jockeys to place their bets on in the AI space? So you have a lot of founders building. You have a lot of founders building for different sectors. The question is are these the right founders, and are they able to really grow and get customers? Um, so when it comes to evaluating early stage startups, it's really like, can these founders get customers? Can they grow? Is there a willingness to pay? Um, and that's how I'm evaluating. But I'm excited about a lot of founders building in, like I said, these legacy businesses, whether if it's like, for an example, in accounting or legal and stuff like that, where not necessarily like replacing humans jobs and stuff like that, but just making these companies more efficient, solving way more deeper pain points for the customers and stuff like that. So I'm evaluating founders that are building in those spaces and stuff like that. Um, and yeah, I think also just having the tech as well. Like when I evaluate an AI, a founder building within the AI space, is really like, does the tech, or at least what they're saying, does the tech actually solve that pain point, and how far are they from a technical perspective and stuff like that?
Yeah, I really like the point that you made around the jockey, or who's actually kind of building. And I think talent and talent cost are important considerations when you're building a venture. Now, between Bangalore and Silicon Valley, I think in both these markets, which are different from one another in several ways, what are the similarities when it comes to hiring, and what are the differences you see when it comes to the cost of talent?
Yeah. And so real quick. So what's interesting to kind of on like I just thought of this, is someone told me once, where around the jockey real quick, is like, somebody told me that like back, so when I was like really young, there was like Yahoo, there was like, and then Google, and there's like all these like search engines. Somebody told me one day recently, they're like, well, what if like OpenAI is just like the Yahoo of AI? Like, we're so early, where like, who is who are the right jockeys to bet on and stuff like that. So yeah, just to kind of double click on that, is like, we're in such a massive new technologically wave, and there's a lot of founders building. So you have to really um find the right jockeys and invest in a lot of different jockeys and stuff like that. So, and hopefully you find the right one. But in terms of the talent, that's a really interesting question, because I think Bangalore talent is getting very expensive. And I think that they're, it's obviously, the compensation is different in the US rather than Bangalore. But in terms of like the talent, like it's hard to hire in Bangalore, and I think a lot of my founders struggle with that, because if they're not at that Series B or beyond level, it's hard to pay a lot of these individuals and stuff. So I think that it's very similar. I think the only difference is really compensation. And I think now, um, a lot of the best talent in Bangalore is getting opportunities to work at these larger companies that pay more. I think it's really hard for a seed stage founder to hire really good talent in Bangalore, because a lot of this talent has a lot of access and optionality. Like, why would I go work for a seed stage startup when I can go work for, a company like Grow or something like that? Like, I know maybe that's a bad example because they're so late stage, or they're public now, but like, or I could go work for like a pre-IPO company that's maybe at that Series D level, where like, I'm not gonna get crazy stock, but I'm gonna get enough stock. So when it does go public, maybe I get like a 2 or 3x over X amount of time, and I keep getting more RSUs and ESOPs and stuff, and I have like a really healthy salary. So I think and we're seeing that in the Bay Area too. Like, just because you're in the Bay Area doesn't mean that like you can, and you raise money, means that like you're gonna be able to hire like a bunch of people. Like, it's hard to find talent, and what it comes down to, in my opinion, is like, how much capital does the startup have? And is it one of those darlings where it's like constantly in the news, raising capital and stuff like that? So it's very similar from that perspective that I see in Silicon Valley and in Bangalore. But I do think that if you kind of take the contrarian approach, and like, there's other places in India besides Bangalore that you can hire from. And I think if you can identify those um, areas, you pay less, but more so like maybe those individuals are more hungry. And hiring is a really hard part of being a startup founder. Um, but the beauty about India that is I think is fascinating is that India graduates like 1.5 million engineers yearly, and now they're like a lot of them are like all AI native and stuff. So there's a big talent pool. So that's how I see the hire. It's a very tough problem. And the way that I would solve that as a founder is just like obviously being on social media such as LinkedIn, going to events, poaching, reaching out to people, being more generous on ESOPs. Um, you know, it's tough though. That's a tough piece of the business.
Great. Uh, Going on to the next question. I know that we are pretty much restricted on time, given
Oh, so good.
what time you're calling in on. So if you look at going from zero to one, and you did speak multiple times about Bangalore or India being a great test bed for companies to start early, grow, scale, and get on to kind of larger opportunities. So when you look at it from a zero to one perspective, um, how important or where do you as someone who has been an operator and now an investor, how and where do you see cash flow in determining success and patient compounding for ventures over a period of time?
Yeah, I think that the um so the question is more so like, can you go a little bit more deeper in that question?
So from a cash flow standpoint, right, I think there are a lot of companies who are able to raise a round or two rounds of funding in really short periods of time. But going back to how operational efficiency is at the core of being able to scale over a longer period of time rather than kind of having venture investing as a milestone in itself. How and where does kind of cash flow come in, and
Oh yeah,
what
okay.
would your advice be to founders in that regard?
Yeah, I it's a that's an interesting question. I haven't like answered a question like that in a while. I think that when you a lot of founders and people say this all the time, a lot of founders like celebrate when they raise capital. And that's like almost like the end of the journey. But really it's the beginning of the journey, and now you're kind of beholden to other people. And you have a like there's like a clock that starts basically. Um, I would look at this as, celebrate the wins and be excited for raising capital, but every dollar in that bank account is like that's like another second you have to breathe. So being as lean as possible and being very frugal with your money, but also not not spending it. And I think that's something where you have to walk a fine line of like allocating correctly, but being able to A/B test and throw things against the wall to see what sticks with the capital that you've raised. So as an example, like whether if that's like launching different growth campaigns, like, or figuring out ways to organically grow, or, potentially, looking at new markets to scale in. And really it's about moving fast. And it's like being lean and frugal, but moving fast. It's all about moving fast. Like, how can I get to Series A as fast as humanly possible? And how can I raise more money as fast as humanly possible? And people may argue with me on that, where it's like, well, you don't need to keep raising venture dollars and stuff like that. But I'm in the business of like investing in founders that are building like decacorns. Like I believe there's going to be so many decacorns in India the next 10 to 20 years and beyond. Like, I'm not investing in lifestyle businesses, so, like, really be frugal with your capital, but be able to move ridiculously fast with that money, and the way you do that is just being really lean and hiring people that are just ridiculously passionate about what the company's building, and, like, have people wear many different hats and just move super fast. And that's what I think when people say, like, startups are hard, like, most startups fail, and I think that that is the crux of it, where it's like the reason why startups fail and the reason why it's really hard is because that part of that journey right there is so difficult where you have to balance the amount of money in your bank if you're even capable of raising money and then getting to that next step. It's so hard. And then being able to hire people that are also on the same page as you that are also willing to spend all night and all day working for this idea. Like it's really, really difficult. And there just to chime in on the one of the questions from FK is being a solo founder a disadvantage. Um, I think that's on a case by case basis, but I think majority of the people, if you were to look at like the top investors in the world, and I would look at like Y Combinator as one of them, and obviously the tier one VCs, being a solo founder is, in my opinion, is a very bad idea. If you're trying to build a venture backable business that is trying to scale, and really solve crazy deep pain points. And the reason I say that is because like being a solo founder is a very lonely journey. And like even if you have like employees or like founding team members, they're not like your co-founder. They're not like they're still like on lower on the equity poll. They're not like in those deep conversations. Like have a co-founder, like, and you'll be able to and hire and bring on a co-founder that has the complete opposite skill sets that you have. Like, if you're a business person, go hire a technical co-founder because you'll be able to move that much faster. And not having a co-founder is just gonna only allow you to move so fast, and you only have so many hours in the day, and you want somebody that's on that level of like equity where like they also have skin in the game. And finding a co-founder is really, really hard. And I think finding the right co-founder is really, really hard. But I cannot. I mean, you guys can put it in the chat, but like, I don't know what founders are like solo founders that have started massive businesses. And people will argue with me. I think maybe Nika or like there's a couple examples in India. I could be wrong or Mintra. I forgot what it was. I probably getting this wrong, but like very few examples are companies that have done well with solo founders. So that's kind of how I think about it. Sorry for the long-winded answer.
No, Brendan, I'll also tell you why I asked that question for a simple fact that in the past 12 months, there are more than 11,500 startups that have shut down in India. So it is seen as a more of a market reset or a market correction more than anything else. But one of the primary reasons why companies are shutting down, probably the answer could be many of the above that you spoke about, whether it's in terms of building the right product out there, having the right team in place, probably having a strategy to build scale and get onto that first series of or first round of institutional investment like real quick and which allows you to kind of scale. And then probably it also attributes itself to having a good robust kind of a cash flow which kind of adds to the traction that you have built in the market. But
And
that
yeah, and especially real quick, just to add that, like, I think now the bar is higher as a founder to raise capital. I
yes.
think that like when I first started investing in India, it was like 2020, 2021, where like you just a lot of people could raise capital with really any traction. And I think the goalposts have shifted and investors want to see like what we talked about earlier, like some revenue, like people actually wanting the product, and there's actually a really deep pain point for it. But with a lot of these startups that are shutting down, that also is a huge opportunity to find new co-founders to start new businesses. See, the thing is what I realized about if you're a founder, no matter if you're like a investor, if you're an operator, whatever it is, lifestyle founder, if you're whatever it is, there's always new ways to reinvent yourself. Like just because and that's the and it's that's the thing about entrepreneurship that I think that a lot of founders get wrong is that like they they think of an idea and it fails and they're like, okay, well, it didn't work, so now I have to go, back to work at wherever, right? And that's not the case. Being a founder, you have to you have to endure. You have to have crazy endurance, and you can always reinvent yourself. Like, and I started a pet company, right? And now I'm investing in India. Like, it's completely two different planets. You know what I mean? Like, but like you can always reinvent yourself. You can always keep going. You can always. be in the ecosystem. And I think that like those 12,500 startups that are shut down is a huge opportunity um, to meet new people, to meet new co-founders, to figure out new pain points, to figure out new products in the market. And that drew me to India that I think is like really important that like you get in Silicon Valley too, but the only place in the world in India that you get to is that people are willing to like test product and use
Mm.
product. And there's like it's such like unique markets and stuff. So um yeah, it's really enduring in like putting one foot in front of the other and consistently keep reinventing yourself.
Great. I'll go on to one final question before we kind of take a
Yeah,
look at some of the questions in the chat. So we talk
sure.
about the US-India corridor, and as someone who has been active on in both ecosystems, what's your take on navigating market dynamics for market entry and for fundraising? If it was an Indian company looking at the United States.
Yeah, yeah. Well, this is kind of like our thesis is like I think if you're an Indian founder building for the world, or you want to come to the US, you should be in Silicon Valley and you should apply for the O1 visa. Um, and that's hard to do, but like I think that that's the if you're building for the world, you should be in Silicon Valley, in my opinion, or if you're building for USB in Silicon Valley. One thing about the corridor, in my opinion, is that in Silicon Valley, there's a lot of NRIs, as we all know, and there's a lot of funds now in India that now have partners in the US. And I think that if you're an Indian founder coming to Silicon Valley, it can be a very soft landing spot to like, and there's like, South Indian restaurants down the street from where I live. There's like, you know, there's like different temples. There's like it feels like you can be sort of at home but not. And there's a lot of people that like went to the same colleges and stuff like that. So it's easier to integrate here. And I think if you're a founder raising capital, um, if it only makes sense, in my opinion, is if you're building for the US markets or global to come here and raise capital, or at least um, like that's my opinion. But I think if you're coming here and want to build for India, yeah, I think you could come here and really, deepen your network, but I don't think it's necessary. Um, but I think most investors that I interact with that want to invest in Indian founders building for India, a lot of them, if it's not their core thesis and their mandate, they want to see those companies, but they do want to invest in India. I see their appetite happening at like that C plus Series A level once the company's really baked out more, and that's where kind of I come into play. So like I brand myself as like the eyes and ears for early stage India for Silicon Valley. So I have funds that are the GPs of some of the funds in Silicon Valley are LPs in my fund. And really what I do is like when founders are growing and they're ready for a series A or whatnot, I'll introduce them to the GPs at those funds and really deepening my network for those founders and stuff like that so they can have a better just diverse network. Um, so the quarter it's a great place to kind of go back and forth and have similarities and like having it's very easy to integrate here if you're Indian, in my opinion. So hopefully that answers your question.
No,
Uh,
thanks for that. And just as an extension to that one, when should a founder or a company consider themselves to be really ready to be in a
oh yeah,
position to
right.
raise funding from the US or to actually get into the market?
So if you're building like so I see a lot of founders that will like have design partners in India and like test the product, get feedback, and then their aspirations is to like come to the US and launch in the US. I think that that's a good plan, but I think it should happen very quickly. I think you should I don't think you need to have like a bunch of revenue or get to a certain stage. I think that if you are trying to raise capital in the US, you really only need to have like a design partner or two, but have a plan in the US. Have like a maybe you've already like developed some sort. Maybe you've like reached out to customers in the US and you have people that are willing to try the product and stuff like that. And you don't need to wait to be able to come and raise capital and to launch here, in my opinion. Again, it's all about like moving fast. And I think that Silicon Valley gives you an opportunity to like be able to like do that quickly, even though you're from India and stuff like that. So I don't think there's a time limit. I think you get on an airplane. I did a post the other day. I was like, you should come, like just book a one way. If you're building for the US or building for the world, just get a one-way ticket here. Like figure out the visa stuff. I know that's really difficult. Or at least do a stuff virtually, whatever it is, just like integrate as fast as humanly possible. And the thing that Silicon Valley that I think India or Bangalore specifically is adopting, and I think it has already, is that Silicon Valley rewards hustle and hard work. And as I alluded to in the beginning of this call, it's like Indians that I've seen are shameless. And like when you like, it doesn't matter like where you go to in Silicon Valley as a founder, it does not matter really where you go to school. It's a matter of like if you're willing to endure and just hustle and just like keep getting hit in the face and getting back up and just like keep going
Hmm.
because Silicon Valley rewards that. It doesn't matter if you fail or not. Like it's not like it's never I never like say like, oh, you lost. It's like you always learn. So like Silicon and you can always reinvent yourself. Like I said earlier, like and that's like I'm seeing that more in Bangalore where it's like I'm seeing founders that I talked to in 2020 that were doing completely different ideas. They're still going, they're still building. They have totally different co-founders. Um they're staying lean and they're just moving forward. And I think that's like really special. I think that that is like the DNA of startups and that's what keeps it alive. So that's kind of how I see founders. Like you don't need to get to certain milestones. You just need to do and be shameless.
I think it pretty much summed up between Bangalore and Silicon Valley. I think being shameless, absolutely. I mean, that is your first skin, not even your second skin if you're being an entrepreneur or you're entrepreneurial. And probably, I mean, if you're that, you got to hustle to make your way, whether it is getting into a new market, raising capital, or expanding your business. Uh, I'll hand it over back to Ninad. I was told 45 minutes. Ninad is back on the screen, prompting me. So Ninad, back to you.
Thank you, Brendan. We
Yeah, sure. Thank
like
you.
3:30 a.m., 4 a.m. in the morning, 4:15.
Yeah,
So we don't want to hold you up more. We really appreciate your uh,
sure.
on a day like this, early morning. I heard some bit of it. Friends, this recording will be on YouTube. You can check the link. We'll share it with you later in case you want to share it with some of your friends who may have missed what Brendan said. He's got a unique perspective, and you heard him. In 45 minutes, what you heard was just the tip of the iceberg. He's got such a unique perspective, and I hope you grabbed each and every word of it. And of course, thank you, Ajay. He is the kind of compare extraordinary. He is always able to get the best of people. And this topic was a little complex, and I thought Ajay is the right guy to have a conversation with Brendan.
Yeah,
Remember,
thank you so much.
friends, our startup buzz is every Thursday, 5 p.m. online, 45 minutes, the latest and the best topic in the world. And today we did have one of the best in the industry, Brendan Rogers and Ajay. Thank you both of you for joining.
Thank you so
Thank
much, guys. Thank
Pleasure.
you.
Thank you.
Talk
Thank
soon.
you.
Bye bye. Ciao. Bye bye. Thank you.